what have you done, and then how it comes that you have this knowledge about economy, stock market, and all these financial assets.
Sure. So my my career in investment started 50 years ago, and I've been investing money in the stock market and all kinds of other things ever since then. My first exposure to equities in particular came about 6 years before that, or maybe 4 years before that, when I was about 14 years old, and I visited my granddad in hospital. And he was probably in his final days, but he had a little exercise book in which he kept the names of 4 or 5 stocks that he held, UK stocks they were, and against each stock. So there was one page a day, and each day he'd write down the name of these 4 or 5 stocks, how many shares he held, the price, multiply the number of shares by the price to the right-hand side of the page with the value of that holding. Then you'd add up the column and get to the grand total. And at the age of 14, I was absolutely fascinated that not only did the price change, the value of each holding would change, and then the grand total would change. So we had a page a day, and I could go through these pages and see that the grand total was different every day. And I became absolutely fascinated by the concept that and of course, he was boasting a little bit because stocks were going up, that he was making money in this way. And I was determined that at some point, when I reached old enough, which was 18 years old, I'd start investing. And that's exactly what I did almost as soon as I could after my 18th birthday. And yeah, I've been investing ever since. My career was wealth management, looking after high net worth individuals, broadly speaking, or almost always in Switzerland. It was not totally in Switzerland, but almost always in Switzerland, in Swiss private banks.
So, can we say that that episode was really seeding something inside you already, at 14 years old? That
Yes, exactly. I mean, I think there were two seeds. One was in respect to the stock market, and another one was many, many years before that with respect to gold, but very slowly. I mean, I was probably about 6 years old when my granddad played his first trick on me in front of his friends. We were at his house, and he'd brought his friends round, and he put on the table in front of me a bar of chocolate, Cadbury's a bar of chocolate that cost sixpence in those days, six old pence. Obviously, an old pence is not a new pence that we have today. And he also put down a £1 note. And he said to me in front of his friends, Clive, do you want the £1 note or the sixpenny bar of chocolate? Well, being 6 years old, I took the chocolate, and all his friends burst out laughing because there were 240 pennies in a pound back then, and I could have bought 40 bars of chocolate if I'd taken the pound note. So they all found that terribly amusing. And a year later, he tried the same trick on me, but this time he put down the uh, bar of chocolate, the £1 note, and the a gold sovereign. A gold sovereign is a British £1 coin. Wasn't in circulation in the 1960s, but obviously some people had one of these. Not many people had this, but he. So I had the three choices: bar of chocolate, pound note, or sovereign. Well, the sovereign just looked like a coin to me, so I took the pound note. And well, none of his friends did laugh at that because nobody knew what a sovereign was. So, but then my granddad tried to explain to everybody that the sovereign made of gold was worth more than the paper money. My granddad worked for HMRC, the tax man in the UK, so he understood about investments. But I don't think even after his explanation, I don't think any of his friends got it. At the age of 7 years old, I certainly did not get it. But he was obviously trying to explain what's called Gresham's law, where the bad money drives out the good, or is it the other way around? But basically, people conserve the good money, the money made of gold, and get rid of the paper stuff, which is worthless. That was what he was trying to explain. But many, many years later, and it was probably around the same time as I looked at his stock market portfolio, he gave me this gold sovereign, and he said to me, Clive, I want you to keep this forever and don't tell anybody. Well, I broke the second rule, but I've still got it today. But by the time I was 18, I actually took it down to Sharps Pixley in London. I was working in a bank in London, and Sharps Pixley was in the same building. So Sharps Pixley was a jeweler, or rather a gold, silver seller. And I took it in and asked them what it was worth. And I can't remember what they told me, but it might have been they were going to say they'd give me £10 for it, or they'd sell me another one for £25. It was a huge difference. I didn't like either of the prices. But it got me interested in the fact that this £1 coin was worth perhaps 10 times as much. And then I made the silly mistake at the age of 18 of walking around the banks, seeing if I could change a pound note into a sovereign. Of course, I had no luck with that. But the
They didn't change
naivety,
it.
well, of course not. No, of course, the gold was not in circulation. But, it was a £1 coin. So I thought, well, they ought to change it. But obviously, I quickly learned that there's no way you could change a pound note into a gold coin, even though that was the official exchange rate back then.
Yeah, so no gold standard anymore.
No, we were. I mean, this was after America had got off the gold standard anyway. It was after 1971. It'd been mid 70s, late 70s. Ladies and gentlemen, that's the end of this video. Thank you very much for listening. If you like the video, please like and subscribe. The pictures you're looking at now are some pictures from some of the posts I've done on LinkedIn. If you'd like to follow me, or if you'd like to ask me a question, you can write to me on LinkedIn. I will be looking at the comments underneath this video, and I'll try and answer any comments that I can answer. In the meantime, I hope you enjoy some of these pictures, which are coming from the posts I've done on LinkedIn. So if you follow me on LinkedIn, you'll see lots of interesting posts about the stock market, about the Federal Reserve, about the level of government debt, about gold, about silver, and some nice stories. For example, there was a great story I told about the 1933 Double Eagle, where the Secret Service spent over $1 million and 70 odd years trying to hunt it down until they finally found it and confiscated it. That's quite an interesting story. Just to finish this video off, I'm going to show you a short clip of how you should teach your 3-year-old or your 4-year-old about finances. Now, this is from a few years ago, and it's my 4-year-old at the time, and he's sitting in front of an iPad and learning all about the use of Bitcoin and what it does and how it works. You've got to start kids early, so if you're interested in teaching your kids, stick them in front of my videos as early as you can and see what they can learn. Anyway, a few more clips, you're looking at a few more pictures from my LinkedIn, and over to the video of my son at the age of 4 years old learning all about what Bitcoin is. So here we go. 5, 4, 3, 2, 1, and we're away any second now. There we go.
This public ledger, known as the blockchain, is perhaps what could make Bitcoin a financial game changer. Bitcoin is what is known as a cryptocurrency, meaning that it's a digital currency in which encryption is used to regulate the creation of new units and verify the transfer of funds. New Bitcoins come into existence through a process called mining. A miner is a person or entity who runs a very powerful computer in an effort to solve a complex mathematical puzzle known as a block. Miners around the world compete to solve or close a block and are rewarded with newly generated bitcoins if they're successful. All transactions that travel through the Bitcoin network are pieces of this complex mathematical puzzle. So when a miner solves a puzzle, they're actually verifying the integrity of each and every transaction.